right, guys, I want to give you a little Mortgage Monday update. So on conventional loans, you can go all the way down to a 620 credit score. However, you still have to run approval engines, DU and LP. Very important that loan officers run this. You should ask your loan officer, if you're not working with me, did you run DU and LP on the file? Make sure they're telling you the truth. Some will just tell you they did, but it could be detrimental to your transaction if they're not running those things. Because just because conventional says it's a 620 credit score, the odds of it approving with the 620 credit score, especially if they're putting the minimum down, next to nothing. It doesn't approve very often. Do we get them done? Yeah, I just did one with a 640 credit score the other day with 5% down. It worked. I was shocked, but I still run it to find out, if it will work. I had to go conventional with that client because they're DACA. But anyways, conventional loans, 620 credit score, make sure that your lender is running DU or LP, the two approval engines. Now, your down payment can be as little as 3%. There's two situations that you can do 3% down. At least one of the buyers has to be a first-time home buyer on the transaction, okay? Meaning that one person can own a home and the other person's first-time home buyer. You can do 3% down. That is one situation. The other situation is if we're doing a home-ready product or a home possible. Those are both conventional products. And what that is they haven't updated the income for this year, but if they make below $62,000 combined, the two people on the loan, or if it's one, you can always do 3% down. Regardless if they've owned a home before, if you make less than that amount and we can get you to qualify in DU and LP, we can go with a home ready or home possible product and get you 3% down. You also get discounted mortgage insurance on that, okay? Now, you also don't have PMI on a conventional loan, just to give you a little bit more information, if you put 20% down. PMI is private mortgage insurance. Some of you guys, I'm sure most of you know what that is. Now, how is interest rate and mortgage insurance calculated on a conventional loan? All of us pretty much get the same rates for private mortgage insurance because it's done by third parties. And there's 7 or 8 in Arizona. There might be more. I just deal with the ones that really matter, that I know that'll get things done for us. So literally, your mortgage insurance is almost going to be the same no matter what lender you go with, unless some have a deal where they get a discount with a mortgage insurance company like Nova does here. We actually do get that. Or let's talk about the interest rate. Your credit score is a big determining factor with conventional versus FHA. FHA, pretty much, if you're a 620 or higher credit score, you're getting the best rate possible. If you're below a 620, we can do FHA, your rate's a little bit worse. But for conventional, the way it works, it's 20-point increments. So if you're 620, you're getting the worst conventional rate. If you're 640, it's a little better. 660, it's a little better. 680, 700, 720. You kind of get my drift. The rate gets better, and the mortgage insurance gets better too because of your credit score being better as well. And they also work in 20-point increments on there. So what we do for clients, and this is how you get referrals, is when we look at their credit score and they have like a 755, I'm going to say, hey, you know what? We checked. If you go pay this credit card, I'm going to get you a 760. I'm now going to get you a rate that's an 8% lower or a 0.25% lower than this other lender, but I'm also going to get you cheaper mortgage insurance. Did your other lender mention that to you? No? Oh, and that agent referred you to him, and I don't know that agent, but I know a great agent I can refer you to. Then guess what happens? Sometimes you lose a client that way, right? I don't do that. I like to keep the clients with the agent that they're working with. If it's an agent that works with me, of course, but if they come to me and they're already working with an agent, I'm going to keep them with that person. But I can tell you right now, most lenders aren't like that, especially if they know how to give the client a benefit like that. So your lender needs to be thinking like that. Your business partner needs to be thinking that way. So don't take this as me coming across like, I'm going to take your deal. I'm just trying to get you that gut punch where you're going to feel like you could potentially lose a deal. It's always important to have that feeling because it's drive. Anyways, thanks.